This is an example of support. There are two sorts of support in this graph. There is the support we're familiar with, which is the bull trend support drawn by the diagonal from these two lows. But there's also another sort of support, which is the prior high support. Horizontals as supports tend to be more powerful than diagonals, and the reason for that is that diagonal support, trendline support, is an extrapolation from traded levels. Horizontals are actually traded levels. Intuitively that makes sense, doesn't it? The market will find these prior traded levels support in a way that the extrapolation is not quite so powerful. That's a useful proposition to bear in mind when trading, that horizontals matter more than diagonals in terms of support. See how the market broke up through the prior highs, paused, came down and tested them and bounced off them. Obviously that's a possible buy signal. You could buy here and have stops beneath the band. Beneath the band rather than beneath the diagonal, not least because the diagonal is very steep, but also because the band's more powerful. The power of the prior highs may also be to do with the fact that obviously in one level, not only are they actually traded highs, but they will be talked about highs, so the crowd of traders will react to it in a way that they won't be talking about this level, which is an extrapolation from levels, as opposed to actually traded levels, talked about traded levels back in 2010 and 2008. That's why they'll be more powerful. This is a market that's that's slowly working its way lower. You could say it's a bear trend. In fact, if we'd drawn a line from these two highs, that would define the bear trend of this market. Lower highs and lower lows. But what's powerful and exciting about this chart is not the fact that the trend line is driving it lower, which it may be, but the market found huge resistance from the prior lows in the same way that the bull market found huge support from prior highs. Here we have two prior lows in close proximity, two levels, best thought of as a band of resistance. The market breaks down beneath them, for whatever reason rallies higher, tries to break back through the prior lows and finds the band of resistance to be powerful and fails. This may be a bear trend. We could have drawn a bear diagonal, but the powerful and driving force of this particular aspect of the bear trend has been the failure to break back through prior highs, this band of prior lows with this band of resistance. It's a mirror of the situation we saw in the bull trend. This is broadly speaking a bear trend with lower highs and lower lows, and we could have drawn a bear trend resistance with a diagonal up there. But what's exciting about this chart is the demonstration of the power of prior lows to act as powerful resistance once the market's broken down beneath them. These two lows are in close proximity, forming two levels, or more usefully thought of as a band of resistance. The market rallied up, still far from the downtrend resistance, and found problems getting through that band from the prior lows. It struggled, never once closing above the band, closed within it, and then collapsed away again.